guys, it's May, Markets with May and Gorilla.app. We are starting December 8th, Thursday, after that crazy red day with the market being in the green. Past performance is not indicative of future returns. Let me share my screen. Here we go. And we always go through the macro a bit and talk about kind of big picture things to set the stage. But today we're really going to talk about AMC and APE. Okay, APE trading now at 85 cents actually does become very interesting for the sub $5 stocking stuffer list, which I will compile together later this week and post up there so that you can have them for when the market's doing volatile things. But we've got the S&P up, the Dow up, NASDAQ up, Russell up. But like I said, the volatility has been so much that this isn't a huge upside by any means. It's more like a lull, if you will. But crude oil, which started the day in the red and then has bounced back a bit, in general, the end of the year is the end of the year. And you still have, especially through the 15th, as we move into Christmas week, you're going to have a significant decline in liquidity. That's going to swing things around. But if certain funds have to do certain things, it's going to happen this next week. And it's going to just jugger things left and right pretty aggressively, since they all know they have a short trading month. That said, as I mentioned, earnings did not come out nearly as poorly in the fourth quarter. There's a bunch of talking heads that are saying that that doesn't mean a lot because it's going to be bad in the new year. I don't know, because I see a lot of companies having already been very clear about guiding downwards, but the reason they were guiding downwards was not because of the fact they saw problems in their business, but because they were just following like little ducks what the economists were saying. In fact, a lot of them said, look, we're taking down estimates only because the economists are saying so, because we see no slowness in our business, but it just seems prudent because you guys on the street go a little nuts, for lack of a better way to say it. I'll paraphrase. When we look at, I tell you, Zoom sometimes, when we look at what's going on in the market at large, this is FinViz. They do a great heat map and you can kind of see most stuff is green. Tesla getting beat up today because of the news flow. I think it'll take a little bit to absorb, and also it'll be interesting to see what terms Morgan Stanley gives them. But I see this as a net positive for Tesla because it does take the pressure off the stock. Most of the pressure has been selling pressure coming from a known large seller who's trying to raise capital. Well, if he can just borrow the money and use Tesla as the asset and lower the interest rate for Twitter from 11.5 to something significantly lower, then it's a win-win-win for everybody involved, especially because, like I said, if I'm doing the same analysis that Morgan Stanley is doing, that most of the street is doing, Tesla's cheap right here. I know there's going to be people that come and hate on that. You know what? Watch my other videos and hate on those videos, because today we're going to talk about AMC, and there's plenty of haters in AMC. But what I want to talk about AMC, and I'm not thinking that this is going to be the end all be all. There's still a lot of risk in the stock, but I'm interested specifically in the APE shares, not the AMC shares, and they have not been trading the same. There is actually a reason why the traders, or the day traders, whatever you can call them, are pushing APE downwards. And that is an issue we're going to go through. But before I go through some of the things that are unique to APE as to why the day traders are doing what they're doing, let's talk about AMC in general, for those of you that aren't as familiar with the story. And I'll do a brief version. I know some people have been sitting, examining under a microscope every aspect, but this should get a lot of folks started that maybe don't know the story very well. Okay. It's almost impossible to think about the story or talk about the story without doing a little bit of an understanding and dialing it back to 2016. And at that time, AMC hadn't been doing very well. Adam Aron was brought in. And I'll tell you, the story is very different if Mr. Aron was not in that seat, because Adam Aron is a boss of a CEO. Let me just say it that way. He has a very long history. But the one data point that was probably my favorite, and that I know fairly well from back in the day, if you will, was when he became CEO of Vail Resorts. And what he did at Vail was nothing short of spectacular. The thing that makes this particular guy talented, right? He's not just a turnaround specialist, but the way he sees how to use assets is fundamentally creative and different. So he's not the type of turnaround where you just need him to operate and execute. It's the way that he actually sees assets that other people cannot see. And then how he subsequently executes to get that turnaround. He's doing the same thing with AMC. It's a little hard to pull off because there's so much noise in the chatter. With Vail, what he did was originally people could only possibly conceptualize people going to the mountain, skiing, and then paying their lift ticket. He was like, no, friends, that's not what we're going to do. We're going to do seasonal tickets. We're going to take that money in. People aren't going to be on the mountain all the time. So we'll just have taken in capital in advance of them arriving. And then we'll get both the fact that we've got a lot of prepaid capital to renovate the mountain, and also all the lift tickets thereafter will just be gravy. People bought the whole month lift ticket every single day of the week because they felt like they were going to ski 30 days, but they did in fact not even come close to skiing 30 days. And then as he renovated and recapitalized the mountain, it brought in business like crazy. All these little ski villages that we know and love these days, they're all a function of every ski village taking the innovation that Mr. Aaron put to work to make Vail crazy profitable, and subsequently the other properties associated with Vail. This guy is really, really good. With AMC, there's a story there. We'll get to that. But realize that this man is a genius when it comes to specifically taking assets and monetizing them better than anyone else could. Now, let's get back into what's going on. I'm going to review briefly the quarter and why right now is actually interesting even for AMC, but because of the way this math works, APE is a way better way to buy AMC, provided you can absorb the volatility. The thing you want to note is they actually did grow top line fairly aggressively, 763 to 968. And this whole year has been a huge recovery. Now, realize that the market cap of AMC is, even though, okay, the market cap is 3.2 billion. So they're going to make about 2 billion by the end of this year. This was not a great year for movies. Okay, we had some really great blockbusters, but in general, the film business is short, or because of what happened through COVID, there's a lot of movies that just didn't get funding, didn't come out, etc. In the coming year, there will be a lot more movies that come out, and thus a lot more revenue accrued to AMC. I want you to notice that his food and beverage ticket sales are significantly higher than years past. Now, he's got a higher food cost as well, but that is just to be managed given food inflation. But you can see that when people come into AMC, they are actually spending more per person, per ticket, and per body in the seat. Now, operating loss of 114.9 looks bad, except if you realize that there's about 100 and change. There's more than that in D&A, depreciation, amortization, and merger and other sorts of costs. Okay, so you've got 136 there. So you did actually turn an operating profit, which is a huge deal given where this company has been coming from. That's why I'm saying right this minute makes this stock very interesting for folks that are looking for long-term holds and a $5 Christmas list, $5 stock stocking stuffer. Okay. Now let's go to the cash flow statement really quick. I just want to show you this because, again, whenever you've got negative earnings or negative operating income, you want to see what's the cash flow look like, what's going on with the cash. On operating cash flow, remember the way that they report, I didn't see a 3-month statement. I only saw a 9-month statement, realizing that they're just turning the corner this quarter. For the year, it's still going to look a little bit like a operating cash flow negative 218, but you can see that the application of a lot of the capital in operating cash flow is going to accounts payable, accrueds, things like that. They're going to clean up this entire financial statement going into 2023. So that's not bad. It's not great. It's not bad, but it sets him up if he isn't wrong about his prospects in film in a good spot for next year. So then let's also look at the balance sheet, because we all know that what they did during the meme stock period is pay down debt using equity that they raised. And then off of the APE and AMC split, they already told you that they may or may not do more to equitize versus debt finance this business. And we can see that long-term debt actually came down a bit. I mean, cash is down 908 million, but debt more or less came out of that. So that difference in 78 would really be considered just charges that went through the business. I'm not upset with that. That means that right now, this company it trades at 13, this company has an enterprise value around 13, 14 billion, let's call it 14 billion. And they do about 2 billion in sales right now, which sounds insane in some ways, because, but you just have to realize that it's whether or not they can start paying this debt down more aggressively or not. So valuation wise, it looks a little bit ugly, but for all of the changes that are being made. And again, like I've said in other videos, with enterprise value, it's just a function of how fast are they servicing this debt payload. And given this, the answer is they're actually servicing it down actually reasonably quickly, given that the company's really in phase one of turning the corner, so to speak. I'm going to show you cash flow from financing. You can see what he did here. Then he basically refied 950 million of his debt and got rid of everything with a 2005, 2006 a terminal period. So all of these notes due in 2005, 2006, he termed them out to 2029, giving himself a ton of runway to turn this thing around. Additionally, this all was done at interest rates that are probably pretty attractive if you think we're going to continue to have a rising interest rate environment. So this is really good, gives them a lot of chance to execute. Now, let's actually talk about the next steps, and then let's talk about why APE versus AMC, despite that I'm probably lone girl thinking about it this way. Two of the things that he's willing, so aside from what I mentioned as far as the movie business goes, which is that next year, expect more movies to come out in movie theaters than has happened this year. That's a function of the fact that a lot of the smaller film companies sold the film themselves to other production companies as a way of managing through COVID. Those films are now coming through it, since more than one film has come out, massive blockbuster demonstrating strong demand. So next year should be a little bit better in that business. So that is one thing by itself, nothing changes. You can attach a growth rate to it and see what you expect. However, these two developments are interesting. The first one is probably the more interesting one, and that is something that is slated for starting in the first quarter of 2023, but was announced last quarter or early this year, 2022. You can look at the tape. I think it might have been actually announced in November of 21, so last year. But they are going to start development on snacks, popcorn, that they will sell in grocery stores, essentially. And I actually think that as much as people think this is silly and not a meaningful thing, you can kind of see that in his strategy, he's going to try to monetize every part of the brand AMC as he can. And the reason that I think this is interesting is because snack food businesses, if they're able to show profitability and good demand, actually do get bought at a reasonably high multiple, because the snack business in general is a very growing part of consumer staples. So this one I would watch out for. I'm not convinced that everybody has baked this into their numbers for no other reason than I'm not convinced that it would be that straightforward to bake it in. You'd actually have to go to look at private equity companies, but then given the way this is funded, it's a weird way to do it, for lack of a better way to describe it. And then, I mean, there's a couple different ways. There's more than one way you could cost it out. So I won't go into the details of that because, you know, that's its own thing. But this popcorn thing, if it actually goes well, does suggest that there's probably a host of items they could take and brand AMC private label, and then make money off of the brand portion of AMC independent of anything else. The second thing is this Zoom meeting technology. Now, I don't think this does a lot for them in 2023, but in the out years, it may be interesting. A lot of people have really talked about this as being a part of the conference business. But whenever I hear people talk about this, I feel that they may be leaving out the concept that this is two-way communication, not just one-way communication. And and that there's a lot more creativity that can be done in using AMC as a meeting space rather than just using AMC as a one-way entertainment space. They already do about 20 million in revenue off of renting out the theaters for meetings. And so in a lot of ways, what he's doing is he's going to grow out this business as a concerted business versus it just being an afterthought within AMC. I think those strategic objectives are very interesting because there's not enough revenue attached to them. My suspicion is that people's modeling of this can be all over the map. That said, this thing isn't necessarily cheap on an enterprise value to what will ultimately be an estimate for future EBITDA, which should be positive in 2023. So it's a little bit funky. That's why I say APE shares versus AMC shares. Again, let's talk about the differences in the share class. There's tons of videos that go out there and talk about why you should sell it on the deal. None of them actually talk about what the terms of the deal were when you spun out. Couple of things. Whenever it was paid out as a special dividend, but the conversion rate is 1-for-1 APE to AMC. Now, part of the reason why some people were sensitive originally was because the intention is to continue to dilute APE from time to time, maybe at the expense of AMC. But right now, AMC, the normal stock, if you will, is actually trading at 7.4 times higher than APE. So that's a lot of dilution that is baked into the stock right now. And or that's a lot of capital raise, let's call it that way. Realize though that this conversion can occur for two reasons. It can occur if the APE shareholders decide and vote collectively to convert it. It can also convert if for some reason someone decides to buy AMC in its totality in the future. Then it would convert immediately to AMC stock so as not to create a difficulty or two share class voting situation on the merger. But you do get one voting share for every APE share. So it's not like these are terribly different stocks or that there's some benefit. Additionally, if there's ever any dividends paid, and this would be many years out because there's no way this man should be paying dividends till he gets that debt down. But in the future, if the stock starts paying dividends, it would pay out equivalently between the two shares. I'm not going to try to pretend like he's going to do a different treatment for one share class versus the other, even though they do have like special notifications for APE shareholders versus AMC shareholders. But let's just put that to the left. The reason the stock has been trading down, though, in the craziest possible way is because of NYSE Rule 802.01. And what's happened is that the New York Stock Exchange requires a $1 trading price or else you get delisted. And my suspicion is the shorts don't totally fully conceptualize this concept, or maybe some of them do and they're just brilliant. I don't know the answer to it. But essentially, if you get a notification that your stock's been trading under $1, you have 6 months to bring the average trading price above $1. And I think people are worried that it's going to get delisted, and so they're selling it and all these other things. But here's the thing. They get 6 months to rectify this, and there's more than one way to do it. One way is to just convert the APE shares back to AMC. That would really tick off the AMC shareholders. And surely since Mr. Aaron owns a huge slug of it, that's probably not what he would do. The other way would just be to do a reverse split. And that will change the conversion ratio between the two share classes, but it would take care of the issue almost right away. So all I'm saying is, given this, if 802.01 is the reason you're shorting it, it is in fact a stupid reason to short APE. You got lots of other reasons maybe, but this wouldn't be one of them. Thusly, however, you're paying 11%. APE is trading 11% of the market cap, but because of the nature of it, it does actually imply that you're getting a huge discount on the value of the stock. So even though you get the same voting rights, if anything happens in the corporate action, you're made 100% immediately. You'll make 700%, right? Like is what it is. If you buy the APE shares, then if you modify the valuation for what you're paying for it, AMC looks crazy cheap at that point, because now you're baking in a very different type of risk. Now, I wouldn't do this if you are someone that really is more of a day trader or a very short-term holder. But if you're like, you know what, I think he's actually moved them out of the concern of bankruptcy, and I'm willing to give him that time to turn this sucker around, because I believe the movie business is going to continue to do well. And I think he actually does take this business to the next level. The APE shares are very interesting, for lack of a better way to say it. Oh, there is one other thing that I think he's getting penalized for. I think this part is controversial, and I have mixed feelings about it myself. This is Hycroft Mining. He bought it for $27.9 million. Okay, remember again, his market cap is about $3 billion. So it's about 8% of the stock embedded in it. But nonetheless, Hycroft Mining is traded down. Hycroft Mining is this huge slug of land out in Nevada that has really great seismic proof of, so it's only at the seismic level, they have to still dig in and see what's going on, of silver and gold reserves. And he believes that when he did the research on it, and you can take a look at both those companies to figure it out, that he is massively underpaid for the amount of reserves that are coming out of that land. This would be upside on the stock. Right now, what it does is, because it's structured the way it is, it's gonna take unrealized losses off of cash flow. And it's just going to swing around a little bit, how you read the numbers. That's common for any kind of investment of this nature. But that is another thing. It could provide upside. It could swing the earnings number around. You got to kind of make a call on how you feel about that. And with that, that's all I have prepared on that. Any questions?
I got it, man. Okay, AMC APE. Remind me again real quick why he needed to create APE as preferred.
He wanted to have the ability to further fund the company because the shorts were coming in so aggressive at AMC, because basically he'd already hit the limit from the board on how many shares that he could issue outstanding. So, there's a limit to how much you can do corporate action wise as a CEO. And because he went ahead and did that secondary offering, when the meme people took it to a crazy place, he was like, yeah, this doesn't even make sense anymore. I would sell stock even at this price. And that actually is where, if you look at the financials in 2021, you can kind of see how the equity value looks and how all of that worked out. So then it was the shorts came in and got really aggressive, saying that if he ever did that again, that sort of thing, and that he wouldn't be able to do that again. So this is a one and done. And there's all this news flow surrounding whether or not he would be able to, given how the company's capitalized currently, continue to avoid bankruptcy. So then he issued this APE share class, thereby giving him more access to capital should he need it. Should he need it is really the big deal.
Got it. And APE is a preferred security, right?
APE is a preferred security, but it's a weird one, in fairness. The weirdness being that any asset raises going forward would be out of the APE side, not out of the AMC side. Now, technically that dilutes both share classes, but it is what it is sometimes in life on how people see things. So,
So I think what you're saying is you'd arbitrage by buying APE and selling AMC.
You could, right? But I think it's a little dangerous because of the liquidity profile of the two. And also because now you've got people that are just selling APE for no reason, or for reasons that have nothing to do with the conversion ratio. So it is a little bit dangerous to do that.
Got it. Okay. Let's skip over to Salesforce, which you shorted quite a bit ago at a lot higher price. And I noticed that their co-CEO is a lot of their management staff was leaving when that happens. And I think you shorted when they brought in the activist guy.
Yeah, Elliott Management. I think.
Yeah, that's really a brilliant call. And when for people that see when high-level executives start leaving, it's not a good sign.
Yeah, I mean, this one's going to be really a rough ride. And it's interesting because I always pronounce his name wrong. It's that French last name, even though I don't think he's French. Mark. What do you call it? What's his last?
Mark Vigneault.
Yeah, Benny. I always say it wrong, so I'm not even going to try. He is such a talented executive, so it'll be interesting to see how this behaves in a management transition versus if there wasn't him sitting there replacing people. But the fact is, he's been slowly but surely over the last few quarters trying to retire. I mean, it's clear as day to me that he's trying to retire. The CFO has been replaced. There's a woman there. She's pretty solid. And then he tried to bring up the departing CEO in November of last year, and then you get an activist coming in almost immediately. So I'm sure he's frustrated, but he personally as an individual is a very talented man. So there's no risk. I would be really shocked if there was any kind of risk to him departing. That's why it makes it a little bit, it was obvious to me that the market had way overreacted off of their investor day, driving it upwards of 160, given what I saw and given the activists that had come in. It was obvious to me that was too much and that there was still a lot of risk on a management replacement, because it's not normal for Elliott or any activist investor to come in like that. Here, I mean, it got beaten up pretty aggressively these last 2 days. I think it's pretty volatile. I'd like to see what happens in the next quarter before I come out too aggressive, mostly because Mark is still there. He's just really talented is the problem.
Yeah.
I mean, it's the wonderful thing, but also the problem. The wonderful thing being that he does actually have enough talent to steer that ship.
Yeah. Okay. In Tesla, we continue I mean, it's really a crazy stock, but I mean, here is our technical analyst, Richard, went back to 2020, November.
So talented. Yeah.
Got to find a gap at 169.50 or something.
Wow, good
So,
for
I
him.
mean, now it's 173. There's no reason this stock should be at this price.
No, there isn't. I mean, fundamentally, I went through it yesterday, and it's really, oh man, the shorts will do what the shorts will do, but this is really the pressure coming from Elon and the potentiality of him selling. So while I think that everybody will be watching exactly how Morgan Stanley structures that debt, because if there are any covenants within the debt that create selling pressure on the stock, for sure, given the size of that particular debt instrument, that will create some interesting things. As far as like in general, it should take pressure off of Tesla because basically what will have happened is that Elon will no longer need to sell his stock because Morgan Stanley will have given him the money, plus or minus any covenants within the terms of the agreement. It is very bespoke when people do these sorts of things, so they can come to whatever agreement they want to come to. And certainly Elon probably already learned his lesson in the way that he so quickly came at Twitter to begin with, that his lawyers will be over it pretty aggressively. We'll have to wait and see. But generally speaking, this should get rid of the big seller that everybody was worried about, which is Elon.
Got it. Okay. All right. And some of the bears are saying competition. I mean,
competition to Tesla. Yeah. The only challenge with the bears on thinking competition is that the market itself is going to grow dramatically. It's about 10 million cars. And that's about 11% of the market.
right.
I'm calling 90 million, the average number of automobiles, period. I'm using 90 million as all new car sales. And the reason I'm using 90 million is because that's what it was in 2019. The last 3 years, it's been lower, but that's been because of supply constraints, not because of lack of demand. If anything, the demand issue, as we talked about yesterday, is ridiculous right now. There's such a global shortage. It's crazy. But let's call it 90. All of electric vehicles, about 10 and change million. So let's use 110 just to make the numbers even Steven. I think like a couple of the different auto agencies are thinking that electric vehicles will be as high as 60% of all auto sales globally going forward. So you've got by 2030. So you've got an aggressively expanding market. And then some of the competition that's coming in hasn't shown a great acumen in getting the parts that they need at the timing that they needed it. So Tesla, however, has shown to be an amazing operator in that regard. So I do think that it's a little bit of an awkward argument that the bears have, but the bears will say what they'll say. And then, oh, and the other thing the bears aren't doing is giving credit to any of the other things coming out of Tesla, such as the solar panel energy business, which is now profitable and is about 1/10, 1/8, something like that, 1/8 of total sales, growing at 100%, and or any of the objectives on light trucks, semis, etc. So either they're right and Tesla remains an auto company only, or they're wrong because they really think all the other stuff is zero and it's not.
Right.
That's how I look at it. And
Yeah.
also the EV market does not grow. Those are the things that have to be true for the bears to be right.
Well, what's hurting the EV market right now is infrastructure, but Tesla has some pretty good charging stations as far as volume goes.
Yeah, and hurt is a really aggressive word because it was the case that Tesla grew the top line at 55% and the EV market grew about 55% this last year. So it's not like Tesla grew in excess to the EV market. It grew in line. And I think it grew in line because it just did, it is because of the geopolitics, and also they were really, like just like everybody else, they had supply chain issues for their scale. So
Got
I
it.
know the Bears are always they're gonna say everything the exact same way, but with the opposite emphasis that I do. They'll be like, but it only grew 50. I'll be like, but it grew 55. Yeah, so it's always interesting.
That's funny. Okay, May, thank you so much.
All right. Good luck out there. It's such a wild ride. Bye guys. See you tomorrow.